Welcome back to Factful Finance, where we break down the world of money to help you make smarter, more confident financial decisions. Today, we're diving into an essential concept that every investor and business owner should understand: profitability. Here's a thought. Imagine a business that's bringing in millions of dollars in sales, but at the end of the year, it's barely covering its costs. That's where profitability comes in. It's not just about how much money you make. It's about how much you keep. So what is profitability? Simply put, profitability measures a company's ability to generate income relative to its expenses. It's the yardstick by which businesses measure success, and it's essential for both short-term sustainability and long-term growth. Let's break this down further. When we talk about profitability, we're looking at it through a few different lenses. The most common way to measure profitability is through margins. Specifically, gross profit margin, operating profit margin, and net profit margin. Each of these gives a snapshot of how efficiently a business is operating at various levels. Let's start with gross profit margin. This tells you how much money a company makes after subtracting the direct costs of producing the goods or services it sells. For instance, if a company has $1 million in revenue and $600,000 in costs to produce its goods, its gross profit is $400,000. Divide that by 1 millioners, and you get a gross margin of 40%. That means 40% of the revenue is available to cover other expenses like marketing, administration, and, ideally, profit. Next up, we have operating profit margin, which digs deeper. This margin takes into account not just the cost of production, but also the operating expenses, like rent, salaries, and utilities. If a company's operating margin is 15%, that means for every dollar in revenue, 15 cents is pure profit before taxes and other non-operating expenses. Finally, net profit margin is the bottom line, the percentage of revenue that turns into actual profit after all costs are deducted. It's the final measure of profitability, and it often reflects the health of a company more accurately than the others. For example, if a company earns $1 million in revenue and incurs $950,000 in total expenses, its net profit would be $50,000, giving it a 5% net profit margin. Now, let's make this more real. Meet Jason. Jason runs a small but growing digital marketing firm. He has $500,000 in annual revenue, with a total cost of $300,000, including salaries, software subscriptions, and overhead costs. This gives Jason a gross profit of $200,000. After factoring in other operating expenses like marketing and rent, his operating profit drops to $50,000. Finally, after paying taxes and interest, his net profit is just $10,000. Even though Jason's firm is generating substantial revenue, his net profit margin is only 2%. This tells him there are significant costs eating into his earnings, and he'll need to find ways to cut costs or increase prices to improve profitability. Understanding profitability is crucial for more than just business owners. For investors, profitability is a key indicator of a company's financial health and long-term viability. Stocks from companies with consistently high profit margins are often considered safer investments. Meanwhile, businesses with low or declining profitability may be riskier bets. It's also essential for personal finance. Let's look at Sarah, who has a side hustle selling handmade jewelry online. Sarah's gross profit margin is 50 cents, meaning she's keeping half of every sale after covering materials and production costs. But if Sarah's operating profit margin is just 10% after factoring in shipping, marketing, and website fees, she might not be seeing as much profit as she thought. By reviewing her margins, Sarah can adjust her pricing or find ways to reduce her costs, ensuring she keeps more of her hard-earned cash. If you're looking to improve profitability, whether in your business or personal finances, there are a few strategies to consider. Start by reducing unnecessary expenses, streamlining operations, or increasing your sales while keeping your costs in check. This is the core of sustainable growth. Before we wrap up, a quick reminder. This video is for educational purposes only. Please consult a financial professional for personalized advice tailored to your specific needs. So what's the next step? Maybe it's reviewing your own profitability metrics, whether for your business or your personal budget, and seeing where you can make improvements. Take a look at your margins and ask yourself, are you making the most of every dollar? Thanks for watching Factful Finance. If you found this video helpful, don't forget to like, subscribe, and click the bell so you never miss out on more insights that could make all the difference in your financial journey. See you next time.